Thank you everyone for tuning in to today's episode of the Neil Coutts Show. Today's guest is Donny Coller. Donny is a cryptocurrency trader / investor. As well as that, he is also a trainer and a mentor within MBA Trading Academy, where he helps people in their own journey into the world of trading. But on today's episode, I had the opportunity to talk with Donny about his own journey into the world of trading and some of the obstacles and challenges he had at the start of his own personal trading journey. So without further ado, let's get into today's episode, and don't forget to smash the subscribe button down there, as well as hit that like button so YouTube can share the content with everyone else. And yeah, just to let you know on the side note that we had a little bit of technical difficulty with today's episode. So the first 2.5 minutes, unfortunately, is no video, but there is audio, and then we get into full swing with video as well. So without further ado, smash that like button and leave us a comment down below if you enjoyed today's episode. And yeah, if you've got any suggestions or anything, be sure to reach out to me through the various platforms, as I've now updated my link tree or created a new link tree profile where you can find all my links, and as well as any other links that any other platforms I use. So without further ado, if I had a remote, I'd click now, but unfortunately I don't. So yeah, while we roll the intro, yeah, take a couple of seconds and help us out by hitting that subscribe button. Thank you very much and have a good day.
Around the world, people live different lives, doing different things that are unique and make us who we are, writing our own stories and learning new things along the way. We all learn different things. We all face different challenges and obstacles, but manage to get through them one way or another. We as humans go through our own journeys, and we learn as we build our own resilience. No matter how much we get beat down, what matters is how we get back up. And everyone loves a good story. Welcome to the Neil Coutts Show.
Thank you very much everyone for tuning into today's show of the Neil Coutts Show. Today's guest is Donny Coller. Donny is a full-time trader as well as a mentor and teacher at MBA Academy. As well as that, Donny is a content creator on YouTube. But without further ado, thank you very much for coming onto the show there, Donny.
No worries, man. Thanks for having me.
You're welcome, buddy. So, Donny, tell me first up, what does a full-time trader do during their day? Do you have a bit of a routine or anything like that?
To be honest, I'm probably the worst person to ask this question. I have a terrible routine, and I know that's really bad. I used to have a really good routine, but yeah, it's something I definitely need to work on myself. But yeah, I'll always check the market in the mornings. I generally check the market just before I go to bed. The last thing I do before I go to bed is just quickly check the market, see what's going on. First thing I do when I wake up in the morning is check the market. You know, after sort of getting up and just doing the usual, having breakfast and just chilling out for a little bit. Okay. That's when I'll generally check the charts and actually do some trading, but not really actively. Like I'll look and see if there's any opportunities. I might adjust some trades if we've already got some open positions. I might set some new trades up, but I don't do a lot of active trading as much as I used to. So it's really just monitoring and adjusting. It's not, it's not looking for opportunities to jump in straight away. But that's about as much as my routine goes when it comes to trading. I don't really have any set times I do things. It's just, yeah.
Okay, so you don't get into the whole meditation or fitness thing like I hear with a lot of other traders, do you yourself?
Yeah, so I have in the past. I used to have a lot of routines like that where, you know, meditation at night, and used to do a lot of walking and things like that. I do still read a lot of books and things, but in terms of like having a set routine that I do every day, not really. I'm pretty casual. Like I said, it's probably an area I need to work on because I've definitely dropped the ball on my routine, that's for sure.
Does it affect your mindset when you don't have like a good solid routine? Because a lot of people, they say that you need to have, you know, like meditation, fitness, all that really helps with your A game. Is that so?
I think it definitely does help. Like healthy mind sort of definitely helps. So all those sorts of things that are good for your mindset, it definitely helps. But I don't know. I think I'm at a stage now where I'm very relaxed with my trading. So I don't really need to do those things to stay on top of my game. It's a very, very more relaxed approach to trading these days, almost to the point where it's more of position trading and investing. I'll still do some short-term stuff, but I don't need to. So I just don't.
Okay, fair. So how did you get into the whole trading game? What were you doing before trading?
Funny story, actually. So I'm a mechanical engineer by trade, and I used to own my own performance workshop building race cars all around Australia, drift cars and circuit time attack and things like that.
Oh, wow.
And one of my customers who I sort of built a pretty good relationship up over the years, he always used to talk about this Bitcoin thing, and we're going back to like 2000 and like early 2017, I would say.
Yep.
He used to always be banging on about this Bitcoin thing, and I had no idea what it was. But I used to give him hell about it. I used to give him a whole heap of shit that it was just a scam and to get a job and stop mucking around with this silly stuff. But I guess eventually I sort of, just the curiosity of it all, I thought, I need to learn a little bit more about what this thing is. What is he actually doing? Because it doesn't make sense to me. So I started to look into Bitcoin, and it was a bit of a mind blow at the time. I was like, oh, this is actually pretty incredible stuff. I'm really interested in how this is working and where it's all going. So at that stage, I had no idea about altcoins. It was just Bitcoin. I was just looking at Bitcoin. So yeah, I messaged him and I said, hey, Seds, tell me a bit about this stuff. Though this is actually pretty interesting. Yeah. How do I buy some? I want to get involved. So he helped me out and sort of bought my first bit of Bitcoin and taught me about all the altcoins and very, very brief understanding of how to read the charts, just at least looking at a chart saying this is going up, this is going down sort of thing. So that was kind of how I got started into it. But yeah, I think like at the time I was working very, very long hours, running my own business. It was pretty time consuming, so I was pretty time poor. So it was kind of hard to fit it in. And I don't think I took it that seriously right at the start anyway. It was sort of just like, hey, this is a cool way to make some money. And, it was at that stage, 2017, when everything was just going up. So even though I had no idea what I was doing, it was pretty easy to make money. So it was fun. It was fun times, and I just made it work.
Yeah, no, they say it was, it was like these bull seasons when they happen. It's like shooting fish in a barrel. You just can't miss, yeah?
Yeah, just throw darts at the board and money is going to go up. And yeah, if you get a little bit too cocky, because I think a lot of people got cocky back then, especially like, looking at a lot of influencers and stuff like that on YouTube. And you still see it today. Like there was a lot of influencers back in 2017 who were just all about this coin, and that coin. Everyone thought that were gods, like, oh, these guys are right on top of this crypto thing. But we were just in that bubble stage where everything went up. And when the price finally turned around, or the market turned bearish and everything started to not really go to plan, we started to see all those influencers sort of slowly disappear. And some of them turned up to be pretty big scams and ended up, some of them going to prison and things like that. They all sort of disappeared, and that whole the mentality of these crypto influencers on YouTube kind of disappeared. There was a few who stayed around, and then we saw them all come back to the woodwork, like out of the woodwork just recently, sort of 2020 to 2021. We saw a new breed of influencers, and same deal. People listen to these guys like they're the oracles, right? They know they know how to pick them, and it's like, nah, man, just throw a dart at the board and you're going to be a genius,
Yeah, no, like the whole space can be a bit of a minefield. Did you find any challenges at the start, or was it because you had a mate there to help you out? He sort of helped you navigate through that minefield.
Yeah, there was a little bit of difficulty at the start. I mean, I got my head around it pretty quickly, so that wasn't too bad. And I guess I made a little bit of money at the start. I actually made decent money right at the start, but when the market turned, I was one of the same guys who just didn't know what they were doing. So I lost most of my money back then. But I saw the potential. So I saw what was possible during that bull market. And then when the bear market sort of started, I was like, oh, this is, I need to know how to do this properly, because what I was doing before was clearly luck. Everyone was lucky, but now I need to do it properly. So that's when I started to really learn. Instead of just throwing darts, I actually thought, no, I need to learn how to do this. But probably one of the biggest differences back then is everyone was spot trading. Everyone was
Yeah.
just buying coins, holding them, going up, and then that was it. But when the market turned, I realized, well, how do you make money when the market's bearish? Like, you can't just keep buying stuff if it keeps going down. That doesn't make sense.
Yeah.
So I started to learn how to leverage trade, and you know, I got some mentors in some different countries to teach me how to trade. Well, back then I was trading commodity futures and stuff on Forex and things like that, and use those sort of skills and bring them over to crypto so I could trade crypto during a bear market. So that was kind of the biggest hurdles, was, I guess, trying to figure out how to make money in a bear market, because, you know, we spent nearly two plus years with pretty average market conditions.
Yeah.
So yeah, that was something that I really needed to learn how to do, was make money in all market conditions, whether the market's going up or down or sideways. You need to be able to make money. So that's why I really sort of got stuck into.
You just cut out there for a minute. You there?
Sorry, mate.
Oh, yeah, that's better. No, that's so. Do you trade any other markets, or are you just strictly crypto?
Yeah, no, I obviously trade commodity futures, trade a little bit of Forex, not heaps. I find it a little bit boring. We had massive restrictions come into Australia recently, so our leverage got really dropped. You know, we used to get up to 500x on Forex.
Yeah.
It doesn't move much, so you need that leverage to actually decent position sizes. And they've reduced that now, so it's not as exciting. It's not as easy to make money. But at least the commodity futures are still pretty volatile, so there's money to be made trading oil and soybeans and things like that. So I don't mind trading the futures. But I also trade on the ASX, and I trade on the New York Stock Exchange, and NASDAQ and things like that. So I do a little bit of everything, I guess.
Oh, okay. So how transferable are the skills that you learnt while trading crypto? How did they go, you know, in the other markets? Is it just as straightforward as the crypto markets, or is there certain things you need to look out for?
No, it's all pretty similar. I mean, like, technical analysis is technical analysis, whether you're trading stocks or crypto, it doesn't really change. The tools you use, the patterns you identify, the strategies you use, they don't really differ that much. So, I mean, and that's what I sort of love about trading. Like, you might be interested in crypto, that's fine. But if you learn that skill, learning to trade in crypto, but you have no interest in crypto, you can take those skills and start trading the stock market, for example. It's the same thing. The only thing that's different is probably like the volatility, the speed, the irrationality of the markets are different. Crypto, in my opinion, is very immature. Like, we see certain things going on, massive pumps and doing 2,000% within a week, and then the next day there's a 80% dump on some coins. Like, it's crazy. It's often referred to as the Wild West. Like, it's just mental. So it gets really hard to follow decent trends. Like, the risk is quite high because it is volatile. Stock market, obviously a lot slower. But it is also very different in the way they evaluate things. Like, the stock market to me, seems very sensible and rational. Yeah, you do get the odd dumps and pumps and things like that with different companies, but most of the time they're what we consider fair value. You know, the price of the stock is generally related to the evaluation of the company based on revenue and things like that, and cash on hand and debt to equity ratios and stuff. So it makes sense that a stock price would be what it is. Yeah. Whereas when it comes to crypto, there's nothing to really evaluate what a crypto coin is worth, because you need to have a better understanding of economics than you do in terms of evaluating a company. You know, these coins aren't companies. You're not buying stocks. Yeah. You're buying tokens or coins or currency within its own little ecosystem. And some of them are almost impossible to value. Like, do you value them against the dollar? Do you value them for the product or utility that it has? Most of them technically have zero value, and that's pure speculation. So from my understanding of market cycles and things like that, a rational market that's based on valuations will generally be a little bit more lenient to volatility, and it will sort of make sense. Whereas a market that's heavily based on speculation alone, we often get a lot of bubbles. So that's why the crypto market often has bubbles and blow off tops and big dumps, is because it's built on pure speculation. There is no underlying intrinsic value really holding it. Some of them do to a degree. It's probably arguable, but With pure speculation, crypto gets pretty crazy. So there is a little bit of difference.
Yeah, because I see it because, like you say, there's no real fundamental news except for the hype that goes around it.
Yeah, it's like similar to hype.
I feel like
actually commodities can also be based on economical situations, even trade routes and things like that. But it's also very seasonal. So commodity futures are very seasonal. The stock market is based on valuations of company, which can equate to things like interest rates and things like that as well, and product sales and just the general economy and such. But when it comes to crypto, no one can justify the prices of things because sometimes they're just out of the ballpark and don't make sense whatsoever.
Yeah, well, that's it. It's more like I said, that supply and demand thing. It's just whether what people are willing to pay for them, I guess.
Yeah.
These blockchains, they offer all these promises, I guess, but until we see any real world, use case scenarios, it's like you say, it's just speculation.
Yeah, pretty much. Yeah.
So when you got into trading, right? Did you, because you said you took it serious in the bear season, you started to go, okay, you switched from a hobby, to taking the trading seriously,
Yeah, so, at that time, like I wasn't necessarily in the best financial situation. I've got a big family, I've got 5 kids. I was running my own business, long hours. It was hard work and I didn't really have a lot of money behind me. And then I made a lot of money during that bull season in 2017. So it was sort of like, wow, this is a massive relief in my life. All of a sudden I've got money. And then it disappeared and it was like, shit, if only I could have held on to that. But it gave me a little taste to say like, hey, there's an opportunity here to, make some money and if you learn how to do this properly, and it could really help your future if I could nail this, or even get so good at it that I could make it a full-time gig. So that's why I knuckled down, because I just think I couldn't keep doing what I was doing. I was just very depressed, just all sorts of issues from my business. I couldn't keep doing it. I needed an out. I needed an opportunity, and trading, I guess, was that opportunity. It was a way out. So I took it serious.
So as you went into it full time, did you experience any challenges or depressing moments, or, like I hear people have a lot of doubt. Did you experience any of those emotions? Did you go through them?
Yeah, there's certain periods where I'd taken big hits and it knocked me around. A lot of the time it was more external interference, like certain things going on in my personal life that would probably affect my trading more than my actual trading skills itself. There was points when the market just didn't go the right way, if I was positioned in the wrong spot and took a big hit. Yeah, it knocks you around, but I did a lot of reading and I'd learned from a lot of people that sort of, I guess, got my mindset right to handle big fluctuations in my account. So I got used to that. One thing that probably really affected me a lot was I had this goal of having a 6-figure account for a long time, because I never really had a lot of money and I only started with like $5,000. So it took me a while to build that up, but I had this sort of goal to end up with a 6-figure account. And when I got there, it was a little bit of a scare, because all of a sudden I sort of look back and go on, shit, like I'm actually risking a fair amount of money when I place these trades, because every time you place a trade, you're risking your money. You got to spend your money to make money, essentially. Yeah. And I sort of look back and go, wow, I'm actually risking a lot of money. I don't know if I'm comfortable with losing that much money. And that kind of knocked me around a lot. Like I found it really hard to progress from there. So I sort of went back to the drawing board and realized what I needed to do, which was de-risk. So that's when I started trading more in the stock market, more passively, basically split my account in half. Instead of just having a trading account, I had an investing account and a trading account, and sort of took half of that fund and went into the stock market and bought some shares and some ETFs and things like that, so that I could sort of go, hey, these things, they're not going to dump on me tomorrow, because the fluctuations, when you're at 6 figures and Bitcoin takes a 20% dive, you wake up in the morning and you're $20,000, $30,000 down. It's like, shit, it takes me a long time to earn $20,000, and I just lost it like that while I was sleeping. So those
Yeah.
things knocked me around. So by de-risking and going to more of a passive route and making my account smaller again, that sort of gave me the confidence to get back to what I was doing and build it back up. And I just kept doing that for a while. Like get to 6 figures, you'd split it out, you'd invest some, make your trading account smaller and just keep going. So that was probably a big hurdle that took me a while to finally get over. But I wouldn't say it was a bad thing. Like it was just took a little while to progress, I guess.
Yeah, no, it's an interesting one. Like, because like if you're not used to having such a large amount of money, like for me, myself, I look at it and I go, okay, I've got this large amount of money. What do I do with it so I don't lose it? And the easiest thing you can think of is just to have it stand still. But having it stand still doesn't make money for you, because I've always been told you got to keep money moving if you want to make money. Otherwise, if you don't keep it moving, you'll end up spending it. So in saying that, like, so one of the things that you used was to just keep dropping the size of your account, and then taking certain amounts of your capital or your trading capital and then putting it down safer options, where you could...
Yeah, less risky, more stable. By buying, say, the S&P 500, you might only make progressively over the month like 1% in that sort of position, but at the same time you can sleep better knowing that you're not going to wake up and 10% of it's gone. It just enabled me to sort of get back to where I was. I've read a lot of stuff on it, and a lot of it has to do with your emotional ties to money and what you're willing to risk, and the pain you associate to losing. So like if you lost $1,000, how's that going to feel? You're going to feel pretty shit. It's going to hurt financially, whatever. So when you are risking that sort of money, you have that fear of feeling that pain again. So it's that paralysis you get because you don't want to have that pain again. So it sort of sidelines you a little bit, and that's kind of what happened to me.
So when you get into these when you get sidelined or you get into like an emotional rut, what are some things you do to dig yourself out of it so you can live for another day, I guess?
Yeah, I mean, it's hard, and I don't necessarily think that I always did the right thing. I struggle a lot from paralysis by overanalysis because I'm a very analytical person, mechanical engineer by trade.
Yep.
I like to understand things and I like to learn new things. I'm always learning. So, if I got to a period where, or even if the market was pretty boring and there wasn't many opportunities, I would go learning. I'd learn a new skill. I'd learn a new strategy. I'd learn a new indicator. I even went down the route of quantitative trading and building algorithms and building bots. And that was basically I went down that route because I was struggling with my trading. I'm like, there must be something better I can do. And I probably wasted a good six to 9 months of my trading building bots and algorithmic strategies, doing quantitative trading, because I thought that might be a better solution. But I realized after a while that I'd probably wasted 6 to 9 months of the market conditions maintaining a bot to try and make X percent when I could have just been doing what I was always doing and making money. So, I guess the issues I had was when the market was like that, I'd go off and learn too much and end up with paralysis by analysis because you'd be trying to find that magic indicator that just doesn't exist.
Yeah. As the saying goes, what was it like? You think the grass is greener on the other side until you get there, and then you realize what you had before was just good enough. Yeah,
pretty much. It's honestly, it's like a life cycle that I see daily. Like, obviously in MBA, we've got students at all levels, complete novices who have never done anything. We've got beginners who are just sort of finding their feet, and we've got people who have been in the community for 3+ years or whatever. And I can almost guarantee that everyone goes on the exact same cycle. They learn the basics and they open their mind and, this is great. And they start to progress, but then they get to a point where it's too slow and they're like, I need to speed this process up. Maybe I need to try, that person's got a strategy that looks really good. What's this indicator? I'm going to go down and start working out this. And they go on this loop where they just try to learn everything, but after so long, they end up coming back and just keep doing the basics. They're trading, they're using things like Fibonacci's, trend line, support resistance, and market structure, and that's about all you have to use. So you learn the basics right at the start, then you go through this section of learning all this stuff that you'll probably never use, and then you end up going back to what you're using at the start. And most of the traders who I trade with, who have been in the game for at least 4 or 5 plus years, who all trade pretty well, like make a decent living from it, they're all the same. They use the most basic tools you've ever seen. They don't use special indicators. Some of them have a little bit better understanding of the market, but market structure, support resistance, trend lines, there's not much else you need to make money. It just comes down to having a good system.
Yeah, so a good strategy, just to have a well-tuned, I wouldn't say well-tuned, but have your edge that you've tuned to, basically, because it's a game of possibilities trading, because you can't win every trade.
Probability, and also it's something that I found really interesting that I learned, which was randomization or random outcome, which is you've got to remember that not every trade you take is going to be a winner. You got to accept the losses, but if you've got a good system, then the winners will outweigh the losses and you'll end up profitable anyway. So eventually you sort of get a little bit over the losses, like you don't really care too much, and you just keep trading your system because you know in the long run it's profitable anyway. So just keep doing it.
Yeah, so whilst throughout your trading journey, how did you deal with the emotions of the market and managing yourself? You know, because as you mentioned earlier as well, you had a lot of external factors that impacted your trading journey. So along with that, those outside external influences and then the emotions of the market, how do you deal with it? Did you have any strategies on how to manage your emotions and greed and all those sort of things that they talk about in trading?
Yeah, I guess I probably pride myself on the fact that I'm pretty disciplined. I don't take silly risks and I never do silly things. I don't get upset that much. Like if I had a losing streak, I wouldn't start trying to gamble and demand my money back from the market. I could quite easily sit on my hands and say, hey, you're trading like an idiot, time to take a week off or whatever. So I was pretty disciplined there. That helped to deal with those sorts of emotions. But I don't know, I've always had a pretty relaxed, for a long time, I've had a pretty relaxed sort of approach to the market. It doesn't really faze me. There's only been a few times in the last couple of years where the market has knocked me around enough to get a little bit upset. Yeah. And one was actually not that long ago. We had a recent dip on Bitcoin down to, I think it was about 55K or something like that. Yeah. And I was actually looking for more bullish activity. So I was positioned quite heavy long, not just in Bitcoin. I had a few alt positions as well. And that was just the way I was reading the market. And I guess my invalidation wasn't as tight as what it should have. And when we broke that level, I was positioned way too heavy long during that period. So I lost a lot of money during then. And that knocked me around for two reasons. One, I was a substantial amount of money. But the other thing was, it was kind of, I almost broke my rules. Like, I normally have a rule that if Bitcoin is in a position that is very uncertain and could go either way, it's best to sidestep the market or at least drop your risk down. And I completely ignored that. I was in the market and I was completely risked one way. So I was completely exposed to a long position. And when the market went down, I copped it twice as hard as what I normally would. So that sucked. Yeah. But, you know, as much as it sucked, it didn't really stop me. If anything, it just sort of like wiped off a few months worth of profit. So back to the drawing board.
Well, that's what I was going to say. It is a bit like that. It's back to the old drawing board, like, because in trading, it's quite easy to get confident when you have a streak of wins. But then when those losses come in sequential order, it's just like, you know, I had a quite hefty position. I think it was prior to May, just before that massive dump. And when that dump came through, like I was winning consistently every day, trend trading. And then and one of the biggest mistakes I learned was leaving a trade open overnight without no real discipline or rules. Yeah. Is that when that market came down, and I think it came down to it ended up touching 29 or 39 or something like that.
Yeah, it got pretty low. Yeah.
Yeah, you know, and yeah, the thing for me was I just stepped back for about about a week, I think it was. It hurt a lot because it
Yep.
was for the first time I managed to grow an account from 1,000 to 10,000, and then all of a sudden I lost half of it because I was over positioned, and then I went through the whole emotional cycle of revenge trading and all that sort of stuff,
Yeah.
just trying to get that money back. And it's quite a common story that you hear about in the market, yeah, or with traders.
Yeah, I actually wrote an article on this exact subject, and this is why I think I've never really been done by this because of my discipline, and I'm aware of it. And I think it's just a case of if you're aware of this situation, you'll probably find yourself not falling for it. So I wrote an article recently called, I can't remember what I called it now, but it's about hedonic adaptation, which is it's a weird, I guess it's a theory or a science that's based on human emotions. And it sort of makes a little bit of reference to a book by Mark Douglas, which is Trading in the Zone. Or I always make reference to it about trading in the zone. And that zone is kind of like an emotional state. And you've almost got to imagine that, you said before, after a bunch of good wins, you get a little bit cocky, right? And essentially your emotions are a little bit heightened. You're not actually in the zone anymore. You think you're in the zone because you've been winning after winning after winning, but you're actually way out of that zone. You're probably going to make some silly decisions. And it's the same thing when you take a big hit. You're outside of that zone again because your emotions are actually really low. You're more likely to revenge trade or just see things that are not there just for the sake of trying to get into a trade. When you're heightened because you're excited, you're probably going to overtrade because you think you can't lose. So you just enter as many trades as you can or over leverage because you just think you can't lose. So it is very important that when you're in those areas, very heightened after a run of good trades or you're down because of a run of bad trades, it is best to take time off because of this phenomenon. You'll generally sort of align back to that neutral sort of emotional state, which is where you'll trade best. So when you do take a big hit, it is best not to jump straight back into the market because you are out of that zone and you need to let your emotions sort of resettle itself or rebalance. And that might take a week. That might take 3 or 4 days, depending on how big of a hit it was, So the best thing you can do is, take time off. And it might just mean a week off the charts. You jump back in and you're good to go because you'll just you'll be over it. And it's weird to think you'll be over it if you take a big hit, but there's science on that. They've done a lot of experiments and there's research on it. And they talk about things like people who win the lottery generally really happy at first, but then eventually, it's normal. That's kind of the theory behind it.
Okay, yeah. So throughout your journey of trading, did you do a lot of back testing and journaling, or was it something? Because I hear stories where a lot of people generally don't do it at the start, and then they do it. I haven't really heard anyone yet say they haven't done it and been successful. But how relevant is it when it comes to trading for you to be doing back testing and journaling?
Yeah, I did a lot of it. Part of the reason I did a lot of back testing was when I was doing quantitative trading, I was building a lot of algorithms. So you'd have to do a lot of back testing to see how like a bot would work. So you used to do a lot of back testing. I don't think it's really that necessary for most people who just do discretional trading. But I think it is still important when you want to test a strategy. But I feel like a lot of people don't do it right. Like if you're going to test a strategy that's going to work with let's say it's a trend trading strategy, there's no point just picking a spot on the map and seeing if it works. You need to find a trend and see how it works during that trend. So backtesting is important. Journaling, I think, is really, really good. For me, it was more about data collection than it was about journaling. And like most people, I think when it comes like building spreadsheets and things like that, which a lot of people do, and journaling, it becomes a very monotonous task because you're trading and then you got to fill in the data and then you forget a week and then you got to go backfill and it gets really tiresome and painful and people normally give it up. But it is really important data, and that's part of the reason why VEMA exists because we wanted to build a system in there that makes it easy to collect that data and build in that journal so that people just do it naturally. But for me, data collection is probably more important than journaling. Journaling is more just about being aware of what you were seeing. If you've got a good memory, you don't necessarily need to journal, but it is important and helpful for some people. But data collection to see how you're performing and where you're performing. Like I used to love being able to pinpoint my strengths and weaknesses and find out where I'm actually performing really well and where I'm performing really bad. So if even just at a base level, shorts versus longs, if I was killing it on my shorts and not so much on my longs, that'd indicate I currently have I probably have a bearish bias. So even when the market is bullish or whatever, I'm not entering the right trades and whatnot. But just knowing where your strengths are gives you a little bit more confidence to trade those market conditions. But when you can see something that you're not good at, you can then go and find out why, and you can go and what is it? You go look at those charts and go, why do I keep getting stopped out trading this strategy? Oh, okay, it's because my stop losses are too tight. Well, if I just adjust my stop losses, all of a sudden my win rate will improve, and now I'll start making more money. So data collection for me is really important. Collect that data, know your strengths and weaknesses, find out what needs improving, and then go and work on those, or just continue doing what works really well.
Fair enough. So do you still do the data collection, or is that something more you do when you're just testing out a new strategy that you come up with?
No, all the time. So with I only really trade through VEMA now, and that collects all the data for us automatically. So I don't really need to do anything.
I noticed that the other day that you were using a platform. And that's the platform VEMA you were talking about, yeah?
Yeah. Yep.
I tried to get in on that, but I have to put my name down for they'll let me know when it opens up or something.
Yeah, we're doing a live demo on Thursday the 13th at 8 o'clock.
Okay.
Just to show people, because I get a lot of questions all the time. People always ask me like, oh, is it a bot? And it's like, no, you don't just put your money in and it spits out rewards, like you do your TA, but you're sort of programming a trade plan, and your actual charts or your drawings are actually acting as trigger points. So you're not keying in a price as such, but if price breaks a trend line, that trend line will trigger the sell, also the buy, and enter the trade for you based off what your trade rules are. And then it collects all the data and spits out some really interesting information that you can sort through and analyze later. Look at your charts and screenshots and journal and all that sort of stuff. It's pretty amazing. It's going to help a lot of people. But yeah, that doesn't get released. I can't really mention the release dates, but it's Q1. That's all we can say. Q1 2022. But yeah. Yeah,
no, I'll be looking forward to that, and I'm sure a lot of people would if it allows you to take out little bits of the it's like busy work. Do you know what I mean? These taking down, writing down your entries and.
Yeah, it just makes it easy.
Yeah, no. And
it automatically collects a lot of that data, but then you can also add tags and stuff as well. So that makes it even easier if you want to really fine tune exactly a specific type of strategy, or even if you're trading a strategy that's kind of I think this is a reversal, well, you can tag reversal there, and then later on you can check your stats and see how every trade you've done that was a reversal, how did that work, and you can of find all that data.
No, that's pretty cool. No, I'll keep an eye out for that. But throughout your training journey, did you ever have like a ha-ha moment where it had all just clicked in, or because I know when I came for me with music, I had a ha-ha moment where it just the beats are all lined up and I was able to beat mix. But when it comes to trading, it's a bit of a grind. I feel like it is. And it's something
definitely.
that it's a marathon. So did you have like a clicking point where you realized what you were doing wrong, or was it just growth and testing over time?
I reckon there's tons of them. I don't reckon there's like one thing that is an aha moment that makes you a better trader. I think throughout most people's journey, they'll have multiple aha moments that sort of piece the puzzle together, and they just, become better and better as they go. For me, I think understanding risk management on a much deeper level was really important, and that's helped me a lot. And I'm pretty disciplined with that, so that's good. So risk management, position sizing was a big thing for me. I had no risk management prior. So, it just didn't make sense. I'd just do whatever I did. I don't even know what I was doing back then. But, understanding risk management and position sizing, and also things like win rate, expected value, average achieved risk to reward, all those sorts of data really helps to help you understand whether or not your strategy or the way you trade is profitable or not. It's literally going to give you a green light or a red light to say you're either making money or you're not. If you're not making money, you need to sort of readjust and find out what's going on. But if it's green, you're making money. So understanding those sorts of things really helped me a lot to stay the path and not get upset over a couple of losses. Because a lot of people will sort of, like, if you have a bad run, maybe you got one wrong, one right, and then you get, say, a series of 4 or 5 wrong in a row, most people would not give up trading, but they would probably stop trading whatever that strategy was. They'd be like, this thing doesn't work. It just loses every trade. But you've got to understand with the probability, you don't know which trade is going to be the winner or which one is going to be the loser. You just know that over a large sample size, you end up profitable. So you don't give up on that strategy, even though you've lost 5. You just got to keep trading it and understand that eventually it'll be profitable. Yeah. So that was a big one for me, is understanding, I guess, the random outcome of trades and trading a profitable strategy over trying to get every trade right. Because most people focus way too much on the short term, trying to get every single trade right, when realistically you should be looking more of a holistic approach or a long-term approach at your overall account and saying, well, is my account growing? If it is, keep doing what you're doing. If it is going down, well then, maybe you need to refine something and pull yourself up and figure out what's going on. But if you look at too short term on a daily basis, whether you're going up or down, you're going to find yourself going around in circles, because you're going to have days where you go up and days where you go down. It's very erratic that way.
Okay. So does it matter what time of day you trade? Like, some people, they talk about different session times, Asia market and American market. Do these all matter in the crypto space, or because they say crypto never sleeps?
It used to. So when I first started trading leverage, we used to stay up at like midnight, 2 a.m., because that was when the US markets the US would wake up, and that's when the volatility came in. So that was always exciting, and that was back in the day when US citizens still had access to BitMEX. So that was where all the volume and excitement was. So that was probably the best time for us to trade. But going back to, say, 2017, 2018, the market was nowhere near as liquid as it is now. So you did have to sort of go to those specific times of the day. Australian times, like Australia's volume compared to the rest of the world was very, very small. Yeah. So it'd be pretty boring during the day here, but it'd be exciting at night or early morning. So, back in the day, I would trade early mornings for the US liquidity. Stock market, the same thing. I'd have to, because I mainly trade the US rather than the ASX when it comes to stock market. So I'd be up early mornings for that as well, waiting for the open of the day. But these days, I think the volume and liquidity has increased a lot, and there's more people involved in more countries. So I don't really feel like the time of the day is anywhere near as important as it used to. So I guess my trading these days as well, because obviously using a product like VEMA, it's very automated, and I don't do a lot of active trading. So when I say active, it's more like I wouldn't be in front of the computer and press market buy and then market sell and get in and out of a trade. I would more look at on a daily sort of trade, a daily chart, see where I think the price is going, set my orders, give it the instructions, and then walk away. So it doesn't matter what time of the day the volatility comes in. My order's already set. It could come in at 2 o'clock in the morning. That's fine. I'll be asleep, but my trade plan will be executed because I've already programmed it. I just don't have to be in front of the computer doing it. So for me now, the time of the day is irrelevant. I'll do my charts in the morning because that's sort of my routine. But when they execute, I don't know. I just come back and look at them later.
So do you use limit orders, or are you using stop limit when you place your trades, because you're sort of just setting them there and leaving?
I've always been a massive fan of limit orders, because I sort of cut my teeth on BitMEX, that was kind of where I learned how to leverage trade in crypto. And they had a really cool system where a market order, you'd pay, I think back in the day, it was about a 0.065% fee on a market order. And if you're doing like fairly large lot sizes, and we were using a lot of leverage, we were using 100x and 50x and stuff back then. So lot sizes were quite big, fees were quite high. But if you were using limit orders, you actually got a rebate of 0.0035%. It wasn't much, but to go from paying a pretty shitty fee to all of a sudden getting a little kickback, that made a huge difference to overall profitability. So I was always a big one for limit orders. I always use limit orders to the point where even if I was actively live trading, I built a bot that would spam transactions 50 cents under price. So even if I wanted to get into the market, I could execute the bot and it would just try and slip an order right in the book so that I'd still be more or less entering at market, but I wouldn't be paying a fee. I'd get that limit order. And then obviously, BitMEX's liquidity dried up a lot recently, over time with US citizens not being allowed to trade on there. I moved over to FTX, and they had a similar system. If you staked enough FTX on their or FTT tokens on their platform, you could get a zero fee for market making. So a market order or a taking order, you would pay a fee, which I think was down to about 0.05 or something, or 0.06. Whereas a maker order or a limit order, you wouldn't pay a fee. So I've always used limit orders. I could get a bit funky using stop limit orders and try and do break and retest, but never really used market. I don't like market orders. Cost.
Because I was just learning about stop limit today, and I understand because I use the OCO function when I place my orders on spot.
Yep.
But because I'm looking into this break and retest, and like you can't just. I feel like you can't just jump in a trade if it's hit resistance or it's hit resistance. It's really got to make a good move up, and then let it come down before you can actually jump in the order. Because if you try and, I feel that if I put it in and it taps the resistance, doesn't actually break through, it could come down, and it was pointless of going in an order. Yeah,
correct. You can get pretty I don't know, like tricky when it comes to using stop limit orders. I don't think a lot of people really use them to its full potential, because it is sort of adding a little layer of conditioning to your orders. So like you just said, you don't, just because it hits a price, hits resistance, you don't want to enter yet. You want to see it like cleanly break above and then maybe retest. So using a stop limit order, you could use that stop limit order as your trigger a little bit higher than that resistance. So it actually has to break resistance and hit the trigger and then place a stop limit order back down wherever that resistance hopefully turns support, and then get your entry that way. So there's some tricky ways you can use stop limit orders. I don't think many people really use them properly. Most people use them for breakouts. So they'll use a stop limit order, but they'll put the limit order above, so it just pulls them into the trade. But I find, well, me personally, and I've seen a lot of people have same issue, which is they end up getting pulled into trades that end up getting stopped out. The fake breakout. You get that wick, you get pulled into a trade, and then the price pulls back down and stops you out. And not a fan.
When it does, it drives me crazy, because you get all this hopeism. You get hope, and you get excited. But it's like a little kid in a milk bar, with all the lollies. You got the shelves of lollies, a 5 cent, 2 cent, and you've been given $1, and you can go buy whatever you want, and it's that same feeling. But the only difference is with lollies, you actually get to eat them later. With trading, you actually lose money, So,
that's right.
So for yourself, what's your deal? BTC or USDT? How do you trade? What is your preference?
Majority of the time it's BTC. I guess I learned that early on. So when I first started trading, there wasn't any USD pairs anyway. Like every altcoin was paired against Bitcoin. So naturally people just learned how to value altcoins against Bitcoin as sats. So you didn't focus on the price of Verge at $1 value. You looked at the sat price of Verge, and as long as it was going up in sats, you were making money. That was kind of how people learned. So naturally people learnt to get around what's known as an arbitrage triangle without even actually realizing that they were doing it. But over time, they started to create a lot more USD pairs, which created the arbitrage triangle. And a lot more people who entered the crypto space a lot later just started trading USD pairs. And they completely missed the whole part of it, and they don't value altcoins against Bitcoin or sats, and they look at the USD pair, and so many people miss out on so much because they're not really focusing on the right thing. So for me, it's always been Bitcoin. You got to when it's a bull market, you have to accumulate Bitcoin. If you're not accumulating Bitcoin with every trade, that doesn't mean you have to hold Bitcoin. You could be holding a bunch of alts, but as long as they're gaining Bitcoin, that's fine. If they're losing sat value, if they're losing Bitcoin, you're not in the right trade. You need to be in Bitcoin, because if the market is bullish, Bitcoin is setting the dollar value. Bitcoin goes up, you're making money. So you got to be making more of that. So when it comes to bull market, I'll be 100% exposed to Bitcoin, and then I'll be trading alts as leverage. But when it comes to a bear market, there's not much point in holding Bitcoin because the asset you're holding is losing value. So I'll switch to USD during that period. I might still have some Bitcoin as investments and things like that I don't touch, even if we do come down, sort of like a long-term thing. But when it comes to trading, I'll 100% go in and out of that. And I guess the other thing is, like when I first started using BitMEX, you could only hold Bitcoin. Like Bitcoin was the currency that you would hold, and then you'd enter trades and earn more Bitcoin. So naturally that worked. But then when I went to FTX, when it comes to the leverage pairs, they don't have BTC leverage pairs. They only have USD leverage pairs. But to get around that, they actually allow you to use your Bitcoin as collateral. So that way I can actually stay 100% exposed to Bitcoin and have a large account balance of Bitcoin, and then use that as equity or collateral to then borrow US dollars off FTX, enter my leverage trade, close it, and either make profit or I owe them. If I owe them, I'll use my Bitcoin to pay them back. If I win the trade, I've got US dollars and I can convert that to Bitcoin. So predominantly when it comes to crypto, I'd be more so hedged to Bitcoin. And then if the market turns pretty bearish, then I'll be USD.
Okay, yeah, because my strategy, and you can tell me what you think, is especially towards, getting that financial freedom in the future, is basically all I'm doing at the moment is trading BTC and trying to accumulate sats. And then basically when it's a good day and Bitcoin's up, take some money out and pay myself. What's your strategy with reaching that financial freedom, I guess?
So for me, when I sort of made the decision to go full time, because I was still part time, I was still running my business and I was still trading, but I was making good money trading. But I made that decision to finally go, I don't need to run my business anymore. I can actually just make enough money trading. But what I actually found when I did that was there was actually a lot of stress, because I actually had to really perform in the market in order to pay myself and try and grow my account, because I understood how that worked. If you've say got $100,000 and even if you're making say 10% a month, which is pretty decent, well, if you're taking $10,000 out every month to pay yourself, well, your account's not really growing. So you've got a business that's kind of not going anywhere. So you need to be able to pay your business and make more money than you're taking out. But that was a lot of stress for me, because I knew that I was going to have bad months where I lose $10,000, $20,000, and I technically wouldn't be able to pay myself without pulling money out of the business, which would suck. So that's why I took on jobs. Like I didn't really want to have to work. I wanted to be able to sort of rely on my trading, but there was stress and stuff that comes with that. So I started work with MBA as an educator, which I really enjoy, and took on that sort of role, which was fun and growing in that space. But having that sort of residual income from doing something I loved anyway, like I was already trading, and now I get to teach other people how to do the same thing, and I get paid for it, which means now I don't have to dip into my trading account so much, and that took a lot of the stress off. So that really helped me there, I guess.
So what you're saying, you didn't you left your business because the business was stressful. You went into full-time trading. It was stressful still because you had a family to support and obviously responsibilities. But I guess the key takeaway is that you still continue to work. And I think that's the big trouble with a lot of people. They think, oh, yeah, I made all this money, I can quit my job and go full time. But it's really important to still keep yourself working to have some sort of stable income.
Yeah. All the guys that I've been trading with for like 5 years, I don't know anyone who has actually quit their job, trade full time, and are like stress free. Most of them have some other source of income, whether it's some sort of business that they own and they earn some passive income, whether they still have part-time jobs or whatever. You've got to have that income coming in that doesn't rely on a trading account. So like you just said before, you want to pay yourself and grow your account. For me, I don't want to touch my trading account. Like for me, my trading account is something that I want to grow to a very large size so that I can keep chipping away at it to invest in things and then hopefully leave my kids something for the future. So I don't want to touch my trading account. I don't want to take money out on a weekly or a monthly basis to pay myself. So for me, it's important to have external income that pays my bills so I can just keep building my trading account. And that way, when you do take a hit, it's not that big of a deal. Your kids still eat tomorrow because the market dumped,
Yeah.
So that's important for me. I don't like touching my account. I just like to grow it. I actually haven't taken profit from my trading account from a long time. I used to. I think that actually helped a lot was taking profit out of the market. With this psychology, because if all you've ever done is put money into the market, and even if you've grown your account but it hasn't grown to a sizable amount, you're still at risk of losing. Whereas if you've taken profit, like if you've got your original investment back and even taken some profit, the money that you're playing with is now technically risk-free, right? If you lose it, you're not really out of pocket because you got all your money back already. So I think that helps a lot. But yeah, I still feel like, for me personally, I'd rather not touch it, and I haven't touched it for a long time. I just keep growing it, and that's sort of my plan, I guess.
I think that's some dedication there too. Yeah.
Yeah. It's a long-term plan. Like, it's not something that happened overnight. That's for sure.
So if you were to go back, I always ask everyone this, right? If you could go back to yourself at the beginning of your trading journey, what would be some tips you would give yourself to set yourself up for success? Do you know what I mean? You know what I mean by the question? So it's like
buy heaps of Bitcoin at the bottom of the market. I don't know. Like, I'd probably. It's hard to say. Like, one thing I do regret, which was through like 2019, I reckon, or 2018, 2019, I did a lot of quantitative trading and algorithmic bots and stuff. And I regret it because if I had to just continued doing systematic and discretional trading, I probably would have been in an even better position because I felt like I wasted a lot of time there. But at the same time, I also learned a lot. And I love learning. So even if I didn't make money from the exercise, I still learned, and that's cool. I learned a new skill. I learned how the markets work on a different level. So, I mean, yeah, as I'd say, if I could go back in time, I'd almost tell myself to don't bother doing that shit. Just keep doing what you're doing because it'll work.
Yeah.
That's one thing I reckon that I'd like to go back and tell myself not to do. Like I said, even though I learned something, it probably extended the roadmap of me becoming professional, I would say. So that's one thing.
So the tip
another thing,
yeah.
I don't know, without knowing how the market's moving and telling myself not to enter or to enter heavy. I don't know. I haven't really made any serious mistakes that I regret.
Wow. Damn, you're a lucky man there, yeah? Because a lot of people, they need to make. We all learn from our mistakes, but some make more mistakes than others.
I've taken hits, but I think because I'm quite disciplined with my risk management, when I take a hit, it was something that I was already willing to lose anyway, so it's not that big of a deal. Whereas, I've had mates who made mistakes who maybe didn't put stop losses on or over leveraged or got liquidated and lost significant amounts of money. That's never happened to me. So I think I guess my carefulness and risk management and discipline has stopped me from having any serious losses that really knock me about or that I'd like to go back and change.
Okay, yeah. So that was pretty much about it. What I have to ask for you today, but I wanted to ask you about your YouTube channel. I noticed you got some content rolling out at the moment. Is that an avenue that you're getting into now?
Yeah, it's something I wanted to do. I felt like for a long time, I sort of I made a name for myself early on in trading, just with having a good understanding of the market, and ended up getting poached by MBA and working for them. And for a long time, I was always just Donny who works for MBA, right? That was just who I am. And it wasn't until not that long ago I thought, like, I need to expand a little bit and brand myself. So, and there's something I'm really passionate about, which is factual education.
Yeah.
And I feel like this is just my opinion, but like when I go on things like YouTube and I see a lot of these influencers and stuff, it actually drives me nuts with the misinformation and the dodgy stuff and the recycled information. Like people are just recycling something they heard last week from that channel, or what I call is brochure investors, right? So somebody who's read the brochure and thinks they understand something, so they try and explain it, but they don't have a clue what they're talking about. So that's something I'm really passionate about. So I've got a drive to build my YouTube channel with really factual information on really how things work, not just on a surface level like the brochure says, but actually diving right in for the people who want to learn. You know, one of the subjects that I've written up a big script for that I plan on doing a video for is dollar cost averaging. So this is just a typical example of people who read the brochure and say just dollar cost average, it's how you make money. So everyone just recycles that same thing and thinks that, well, if you just dollar cost average, you're going to win. But there's actually so much to understand when it comes to dollar cost averaging. In most cases, it's actually a really terrible plan. And like a lot of people like to quote famous investors and stuff. The funny thing is these same famous investors, you go and understand what they think about these things, and they'll all tell you that dollar cost averaging is stupid. That's not a profitable strategy. It's actually stupid. But it's a strategy that gets recycled around on YouTube every day. So yeah, that's just an example of, like, I want to build out information that actually explains it for those who want to actually learn properly. And deliver that sort of information and lots of other cool stuff. So I definitely want to grow that channel. I've got big plans to do a lot of things there and incorporate on my website and stuff like that as well.
Okay. So yeah, no, look, I'll drop some of your links down in the description below for everyone that's
cool.
you know, basically watching here today. But you know, just for everyone out there, don't forget to smash the subscribe button and hit the like button down there. Obviously, with the like, it helps us with the YouTube algorithm, and the subscribe button obviously keeps you connected with us, as well as that bell notification. That will obviously just let you know on your phone and all your devices when an episode come out. But Donny, thank you very much for coming onto the show there today.
Too easy, bro. No problem at all.
Yeah, look, I look forward to hearing more about your content and stuff. Keep churning that stuff out, and I've been tuning in a bit, as well as I do enjoy I'm sure you know about the NBA calls. Yeah, I like to jump in and have a bit of fun.
Yep.
Yeah,
that's
but
all good.
that NBA, I have to say, it's really an awesome community. You know, like, it's something that a lot of traders don't have. Yeah.
I think I don't know whether it's just in Australia or not, but there's a real weird sort of culture that people don't need to learn. I don't know. Like, whenever I see the subject come up in other groups and stuff like that about paying for a course, everyone just throws their hands up and just starts bagging out everyone who's selling a course or any sort of community or group or anything like that. And I don't know. It's a weird culture that a lot of people just dismiss it as it's not needed. But I've seen more success come out of our community than anywhere else, just for the fact that we are dedicated and the information's good, and you know, keeping that accountability and teaching people the right things and how to do things safely. I mean, there's people out there who you know, they just swing a big bag of altcoins and, you know, buying meme coins, and they'll win. They'll have their wins, they'll have their losses. But I feel like if you really want to take it seriously, something like MBA is really, really helpful. Yeah.
Yeah, no, because I see the value. Like, you can download, watch courses. There's 1,000,001 trading courses and strategies out there that's going to get you rich overnight. But I think that a lot of people lack the understanding that you need to be around a group of people that are like-minded for yourself to grow. Yeah.
There's a lot more than just watching a free YouTube video that teaches you how to use Ichimoku Cloud or support and resistance and thinking, well, I don't need to pay for any mentorship now because I've done baby pips. It's like, that's like this much of trading. In fact, it's often quoted that, I can't remember actually the stats, but it's something like 80% of trading is psychology. It's only like 20% of actual technical analysis. So when someone says, oh, I've done baby pips and it was free, I don't need to do any course, it's like, you've learned this much about trading, you've learned some strategies and you've learned some charts. That is about this much. The rest of it is all about, having support and accountability from other people, understanding getting the right trader's mindset, understanding market psychology, what drives the market. And, there's so much more to it than just reading some charts. It's a very, very small part.
Yeah. But also you guys have got the Zoom calls, which, a lot of courses out there don't really have either, and having you guys
a lot of support from the coaches. Yeah. So a lot of, I haven't done heaps of courses, trading courses. I've done a few, and most of them are just like you pay for the course, you get the content, and you're on your way. I did one with a bloke, trader Dante in the UK, and that was pretty hands-on. That was actually really good. But most of them are just downloadable content that you get, and you're on your own after that. Some of them have communities, but they're very quiet and not really moderated. Yeah. But that's something that I do love about MBA is like the coaches are there. We have that constant weekly update from each of the coaches. We all have our market scans. We're always delivering new information. We're showing you what we're trading. We're answering questions. We're sharing charts. We're giving feedback on charts. So you do actually have the support from the product. You don't just get a course. You get the course, you get the community, and you get the coaches. So it's pretty good value.
Yeah. Well, having someone there to ask questions that are experienced there's a lot of value there, and it's not that easy. And a lot of people go out and pay thousands of dollars for mentors. Where sort of got you guys there, and you guys are fairly active in the Discord community as well.
Yeah, I've got friends who have paid tens of thousands of dollars for various courses, especially when it comes to things like Forex and stuff like that. You can go deep into some packages there, and a lot of them will sort of still say that like the value that they get in MBA trumps a $10,000 course that they've paid. So that's good to know. That's good to know that the feedback we get from a lot of the people is pretty positive. So I like it.
It would be fulfilling for you as well, because you're actually helping people. So, and you're helping people create a career, which
that's one of the reasons I love doing it is it was more about, like, I was in a pretty shitty situation, right, financially and mentally, and trading was something that really helped me get out of that position. But I also learned a lot more about finance and being independent and free in that aspect, and I just want to help as many people do that as well. Like, even if like I say to even a lot of my one-on-one students, like, what do you actually want to get out of trading? Because a lot of people don't really think about it, and it's not always about I want to become a trader so I can make mega bucks. For some people, it's just a matter of I want a skill that I can make an extra couple $100 a week, which helps out around the house or whatever, and maybe put some money aside so once a year we can go on a really cool holiday or something like that. Like, trading doesn't have to be a be-all, end-all or the the end of the road sort of thing. People can learn this skill just to earn a little bit of extra cash, bump their wage up, something to fall back on, that which I think is something really handy. With COVID, a lot of people lost their jobs and stuff. Well, if you had a skill and a decent size account, losing your job through COVID would have sucked, but you would have been able to earn your money. You would have been able to sort of fall back onto trading, because during that period, the market was actually pumping and it was quite easy to make money during those periods. So I think it's a really handy skill to have. as a bit of security as well. So I love teaching people that, because I've been in a pretty shitty situation, and having trading saved me. So I want to teach people how to have that skill as well, so that they don't sort of end up in the same situation.
Yeah, the way I look at it is it's a career or a job, and you would understand actually really well because you actually had a business beforehand, but it's one of those, like I could say, a business for yourself where you don't rely on employers, customers, contractors.
It's the best part about it. You don't have a boss. You don't have customers. You don't have inventory.
That's it, yeah.
You don't have bin removals. Like, God, like in my old workshop, I used to have to make, I can't even remember the number now, but it was something like $20,000 a month before I paid myself. So like that was a lot of work back then. Like if you think of profit margins in the motorsport industry, was not a lot because it was a very competitive space. So I would have to make $20,000 profit just to pay all the bills, all my staff, just before I even paid myself. So you have a week where you don't make much money, and that really knocks you around. That sucks, right? But with trading, there's kind of like, I mean, there's probably some ongoing costs when you electricity and maybe a couple of subscriptions of some tools and stuff you use, but the running costs are very, very low. But it's a business. That's the way I treat it. My trading account is a business. It's cash flow. That's how I make money. I use that money to then invest. Like you said before, you've always got to have your money working for you. There's no point sitting it in a bank account and keep adding to it. That's pointless. That's why I break my money down and invest it, because it needs to be somewhere earning yield. Otherwise it's dying because of inflation. So
that's a scary thing, and I think another topic for another day, inflation. But but Donny, sorry, thanks very much for coming on there today.
Too easy, bro.
All right, well, to everyone else, thank you very much for watching. And don't forget to subscribe and hit the like button. From myself, Neil Coutts, and Donny Coller, thank you very much, and have a good day.
No worries. See you later, guys.